Okay, hello everyone. The dollar was mixed overnight, gaining slightly against the euro and sterling, but losing ground against currencies that have been weakening recently, such as the Swiss franc and the yen, which saw some profit taking on those recent trends. For the yen, investors apparently share our concerns about the Bank of Japan's new policy, which I mentioned yesterday. If Mr. Abe feels it's so urgent to do something about monetary policy, why didn't yesterday's announcement include any specific policy measures for this year? We still see a short-term target of 88 the figure for dollar yen and 117 the figure for euro yen, at which point we'd expect longer-term investors to come back in as buyers of both those pairs on the view, which we share, that the Bank of Japan action is only delayed, not derailed. The pound was also weaker, as I mentioned, after Bank of England's Governor King said in a speech that it's sensible to review the bank's monetary policy regime. Remember, of course, that review nowadays never means make tighter, although he did warn against abandoning the inflation target entirely. He also argued that the decline in the pound's value between 2007 and 2009 was, quote, certainly necessary for a full rebalancing of our economy, unquote, which validates the idea of a competitive devaluation. Meanwhile, Prime Minister Cameron is expected to promise a referendum on whether Britain should leave the EU when he makes a speech on the subject today, a possibility that isn't likely to encourage anyone to buy their currency. So sterling dollar, the cable is flirting with trend support around the 158 level. A break of that would suggest 157.20 would be the next stop on the way down. We think sterling should also weaken against the euro, which is the only major currency that hasn't joined the currency wars yet. Net-net, we recommend positioning for a weaker sterling, selling sterling dollar and buying euro sterling. This is Marshall Gittler, head of Global FX Strategy for IronFX, wishing you solid trading.